If you've got an occupational pension scheme, from an HMRC perspective, you should be getting tax benefit from that. How does that work? Well, there are a number of different ways in which you contribute to an occupational pension. The most common way is salary sacrifice, but there's also relief at source. And of course, we mustn't forget about the contributions your employer will most likely make to your pension. So starting with salary sacrifice, that essentially means that you pay your pension contribution as part of your salary, but before it's taxed. So you essentially give up a chunk of your salary. It's treated as a nothing from a tax perspective, and then you get taxed on your salary net of your salary sacrifice contributions. The good thing about that is it all works very straightforwardly, and you don't have to worry about anything from a tax return perspective. If you make your contributions via what's called relief at source, that's a little bit more complicated. What essentially happens there is that you make your pension contribution after you've been taxed on your salary, and that of course means that you're not getting any tax benefit. The way you then get the tax benefit is that your pension scheme will go to HMRC and ask them to top up your pension contribution at the basic rate of tax. So for example, if you make a contribution of £200, HMRC will top that up with an extra £50, which essentially means you've got your basic rate tax back. However, if you pay tax at a higher rate than the basic rate, you're not getting the full benefit. And so that's where putting your pension contributions into your tax return is super important. By putting your pension contributions in when you're a higher rate taxpayer, you effectively increase your tax bands for your pension contributions, and this reduces your tax burden. However, you have to remember that that doesn't actually put more money into your pension. All it does is it gives you less tax to pay on your overall salary. And so if you actually want that money to go into your pension, it's important to make additional contributions so that you're essentially getting that money going into your pension scheme. The final point to make is, how does an employer put contributions into your pension? They put those in outside of your pay. So they make a contribution to your pension scheme, but from a tax perspective, it just doesn't feature. Now, whilst you'll see it on your payslip, there are no tax consequences to that. And so essentially that money goes in as an untaxed benefit from your employer. If you need any help with dealing with your pensions, please do get in touch with LSR Partners.